Are you going to have a pension in retirement? If so, before you claim it, make sure you work with the CFP and explore all your options. There may be a way for you to maximize it. I've got an example of that coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. If you are a teacher, retired teacher, or work in the school system, if you've worked in any government type jobs or for a large employer, maybe you had a pension. I know they're more rare, but there is one of the biggest financial decisions you're going to make in your life if you happen to have a pension. So whether that's you right now and you know it, or whether you say, I don't have a pension right now, but maybe you'll be in a pension coverage job in the future or know someone that is, you want to be aware, right, of those choices. When you are getting ready to retire and you're going to make a decision, all right, how do I want to draw my pension? There's typically 5 or so choices and sometimes variations of them, but it's confusing, different language, and there's different dollar amounts, and it doesn't all make sense. And so you've got to work with a certified financial planner to explore those choices, but then creatively look at those choices and your financial plan and financial picture to see, well, what option makes the most sense. Typically, of the range of choices on how to draw your pension, the life only or single life is going to be the highest monthly payout, okay? And that is the amount that you're going to receive for as long as you're living in retirement. And as soon as you pass away, that benefit stops. No questions asked, okay? That's life only. And then there's a smattering of other choices, but typically the lowest, the lowest monthly benefit is going to be the choice called 100% joint and survivor, if that's an option. And many plans, they have that as an option. And that's the amount, it's again going to be the lowest choice. That's the amount that you're going to get for as long as you live. But if you pass away, your spouse will continue to get that exact same amount for as long as your spouse lives. And then as soon as they pass away, that's it. Then the benefit stops. And there are a variety of choices in between, but that's typically the spectrum. The highest single life, the lowest monthly benefit is 100% joint and survivor. Now think about this with me. What financial instrument sounds like I'm giving up some money, I'm giving up, some income every single month or every single year for a financial benefit to my heirs if I pass away? That if I pass away, my heirs, my family will receive some money. Sounds like life insurance, okay? That's the choice that you're making. How much life insurance do you want? And it might not, there's not going to be this lump sum death benefit, and it might not look and feel and taste like life insurance, but that's what it is. You're giving up some benefit between that single life amount, that highest amount, and say that 100% joint survivor, or say you do 50% joint survivor. You're giving up something financially in order for a financial benefit if you pass away, okay? So in a way, that decision, you're deciding how much life insurance you want or you need on this source of income. But there's a flaw. There's a flaw. What if you have kids, right? Life insurance, if you're buying normal life insurance and you pass away, that money is going to be there for your spouse, or if you get divorced, it's going to go to your kids, or if your spouse has already passed away, it's going to go to your kids or other family. If you've got kids or more family members, that the life insurance that you get through your pension only covers just one person. The other flaw is, what if your spouse passes away? What if your spouse passes away before you do? Some pensions are starting to adjust for this, but most of them do not. That say you select the 100% joint and survivor, and then 5 years into retirement, your spouse passes away. You're still getting that lower monthly amount of pension income, even though when you pass away, this benefit will stop. So there's a flaw with the life insurance that you get through this pension. There is another way. There is a more creative way, and here's a scenario that illustrates that. Say that your pension at single life is $2,000 a month, okay? And if you look at all your range of options and whatnot, the 100% joint and survivor benefit is $1,600 a month. Now, this is a this is a very close to real life scenario. I'm rounding numbers to make it easy to understand. So oftentimes, if you are married and you've got kids, you've got a family, and you're thinking of, well, oh my goodness, I don't know how long I'm going to live, and well, hopefully retirement lasts a long time, but I don't know, and this pension is going to be a significant part of our retirement. If I pass away and that pension just stops, boy, that'd be problematic. I'll go with the 100% joint and survivor. Therefore, I'll go with the $1,600 a month. What you're essentially doing is you're paying $400 a month for a life insurance benefit that's going to pay $1,600 a month for the rest of your survivor's life. Okay, you can do that math. How much life insurance would you need to get in order to provide a $1,600 a month benefit for the next 25 years or 20 years? And you can do that math. Okay, and if you back into it and do that math and say you come up with, oh, I don't know, $400,000. Okay, $400,000. Could you get a life insurance policy at or near retirement, typically just before retirement, so that you've got it in place and you can make this decision? Can you get a life insurance policy for $400,000, say, or $300,000, whatever the math turns out to be, for less than, that costs you less than $400 a month? If the answer is yes, then my goodness, you should take the single life, buy life insurance on your own. It'll be the net, cash flow will be the net same, or you'll be a little bit better if the life insurance costs a little bit less, but the benefit will be the same. In fact, the benefit would be more. So even if the life insurance, buying it separately, costs exactly $400 a month, so it'd be a complete wash, or it costs a little bit more, the benefit would be better, because that life insurance, traditional life insurance, will pay out to your kids and your heirs if something happens to both of you at the same time. You could also choose to stop paying for that life insurance if your spouse passes away early, and then all of a sudden you say, well, we don't need as much life insurance anyway because my spouse has already passed away. You can stop paying that and you'll be money ahead because you've taken that single life pension. The point isn't that you should never select the 100% joint survivor or one of those other benefits. The point isn't that you should always go with life insurance. The point really is that you should survey all of the potential options in light of your specific financial situation, financial goals, and family, and vision of retirement, and all of that. Working with your certified financial planner that's doing comprehensive financial planning, all 6 areas, they're able to evaluate, yes, your direct choices with your pension, but also any other creative options out there so that you can maximize your pension and this benefit for your financial future. So work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.